But really, it was, the Fed raising rates that, brought a lot of those trends, like, like multifamily rent growth to a halt. That said, you've still got the right demographics in place for multifamily housing. You just have a huge, supply constraint, and you've got a growing population, and there's a huge lack of housing out there. Um, but we have to start looking at things more in like localities than just like overall picture for the entire country. Because if you look at just the Sunbelt region, for instance, they had such a run up in rents, but that's the place where I've seen a lot of the trends weren't trending the right way, right? You would have thought anywhere in Texas or something like that, those deals would have worked out. But a lot of people ended up buying when things were pushed already, and the expectations of rent growth didn't pan out. That's why a lot of those properties are. There's nothing wrong with some of those properties, right? They just got into high leverage debt, and some of the rent growth didn't work out. So I've seen a lot of that, and that's a good example of the trends not trending.
And short-term loans.
Yes, when you get
Got a
high
lot of
leverage
people into
short-term loans, and your the economics of your deal don't work out to what your pro forma thought, that you get in a tough spot.
um, and saying that the trends didn't work like they were projected to work is that so many people, unless they found themselves in actual uh, difficulty with short-term loans and they had to do something, most sellers were holding on to the teen prices, whereas there just wasn't a market for what the sellers were wanting.
Right,
And the only sales that were coming through were distress sales.
right.
And is that going to change?